Hi, we are doing chapter 13, irrecoverable debt and provision for doubtful debt. Okay, this is the second class. This is the second class. If you haven't watched the first class, I give you the link. Then you watch that one first. Okay, this is the second class. Okay, first class, we already see what is the irrecoverable debt and recovered debts. Okay, irrecoverable debt and recovered debts, we already checked that. And now irrecoverable debt is actually is not a good thing. It's not a good thing. And all the company, we don't want irrecoverable debt happen. Okay, so what are the ways, okay, what we can do to reduce the possibility of irrecoverable debt? How we can reduce the irrecoverable debt? Okay, there are six ways or six ways lah. Okay, first one, we can obtain a credit reference from a new customer. Okay, for a new customer, I'm talking about the credit customer. If there's a credit customer, if anybody want to buy on credit from us, okay, anybody want to buy from us on credit, and then we will obtain them a credit reference. What's a credit reference? Like it's something like a certificate lah. It's not a certificate, it's a letter from someone says that this particular customer is a very good pay master, they pay on time, okay, they never cheat people and everything like one letter. This letter you can get from your bank. The bank can give you a credit card reference, or any of your friends lah. Friends means like another business, they can give you a credit reference, like a guarantor. We guarantor the people lah. Okay, next one is fix a credit limit for each customer. So each customer, we fix a credit limit. What's the credit limit? The maximum they can owe this much only. Example, we set a credit limit of 1,000. We set a credit limit of 1,000. Okay, that's what Mr. A buy from us. Today he buy 800. Then the next day he come and buy 200. And then the following day, we will block him to buy because he already maximum 1,000. He need to pay the 1,000 before he buy further purchase lah. Okay, we fix a credit limit. I think the credit limit example in your DG bill, your Celcom bill, all these bill also got a credit limit. You need to pay until the maximum amount. After that, they will buy your line. Okay, you need to settle, then only they will continue give you the service. That's like a credit limit similar to that lah. Okay, and monitoring the debtors account, or credit control. Almost all the companies are there for like a credit control department. What is the purpose of the credit control department? Is this department, these people, they will keep track all the payment, and then how much they owe, everything, all the trade receivables records, and then they will, if they owe more than like 5 years, more than 3 years, or more than some certain year lah, certain months, so what they do, they do issue or something lah. Okay, they will try to control the debtors. Okay, another one is issuing invoice and month-end statement promptly. So whenever you sell, okay, immediately you issue an invoice, and every month you submit them a statement of account. You remember, we learned statement of accounts. We send them a statement of account to remind them how much they owe us, and then ask them to pay immediately lah. Okay, sometimes it's not they don't want to pay, they forget to pay. So whenever we send a statement of account every month, every month, so they will know they are owing us, then they will pay lah. Okay, or if they're stubborn, they don't want to pay us, then we can take a legal action on them lah. Okay, send them a lawyer notice or whatever lah. Take a legal action. Okay, another one is use of factoring or invoice discounting. Okay, what is the use of factoring or invoice discounting is actually whenever they like certain people, like one group of people, they owe us, and then they are deferring payment. Okay, they say later, after 1 year they want to pay, but after 1 year only they want to pay. So what we can do, we can sell our credit customer to another company. Okay, invoice discounting and factoring is like that. Okay, we will sell our credit customer to another financing company, but that financing company will buy the credit customers, our credit customers. Okay, now, and then the financing company will pay us, but whenever they pay, they don't pay full amount. Okay, maybe example, I give you example A, company A, B, C, D. These 4 companies owe us 10,000. All together, this A, B, C, D, these 4 companies owe us 10,000. And actually, you are in a very bad financial situation. You need the money urgently. So what you can do, you sell this trade receivable. Sorry, wait. Trade receivable A, B, C. Okay, you sell this trade receivable A, B, C, D. There's a 4 company. We sell to a finance company. We will sell for, like, maybe they will 8,000. So we sell for 8,000. We're supposed to collect 10,000 from this ABCD company, but this ABCD company, they say they can pay us after 1 year only, but we need the money immediately. So what we can do is, we will sell the ABCD company to another finance company. Okay, this finance company will pay us 8,000. Then we will collect the 8,000 and we will handle this ABCD to this finance company. So this later, after 1 year, this ABCD company will pay us or pay finance company. They will pay to the finance company. So from here, yes, we lost around $2,000. Yes, we lost around $2,000, but we have actually reduced the irrecoverable debt. Okay, rather than this 10,000, they cannot pay, they won't pay the 10,000. At least we can collect 8,000 from this finance company. And after this, it's not my problem. This finance company and this ABCD company, I don't know what they do. They will pay each other. They will settle each other. Okay, after this, I and ABCD company have no relation at all. Okay, this ABCD company will pay the 10,000 to a finance company. Okay, this finance company, they have their own way how to collect the 10,000. So for me, I get the 8,000 ready. Yes, the balance 2,000 is irrecoverable debt, but here we reduce our irrecoverable debt by using factoring or invoice discounting. Okay, yes, there are some companies, they do this whenever they need immediate money. Okay, that's it for, these are the 6 ways we can reduce. These are the 6 ways that we can reduce our irrecoverable debt. Okay, next one, we go for provision for doubtful debt. You remember what is the provision? Provision for doubtful debt is actually, it's an estimation. Okay, you estimate the bad debt. Okay, why we need to estimate? Because we are prudent. We will estimate our future loss. Okay, any future loss, we need to prepare for the bad time, right? So accountants always prudent. What is prudent? They will don't overstate their asset, first thing. Second thing, they will get prepared for the bad time. Okay, they don't overstate the asset, and also they get prepared for the bad time. So we estimate our provision for doubtful debt. Okay, a provision for doubtful debt is an amount which a business will lose. Okay, it haven't happened, will loss in the financial year of irrecoverable debt. Okay, it's just an estimation. Okay, we read the next paragraph. At the end of their financial year, many businesses anticipate the amount which the loss because of irrecoverable debt. Okay, actually they have a lot of formula. Okay, they have a lot of formulas to calculate the future. They calculate the futures. Okay. They ensure this ensure that the profit for the year is not overstated, and then the amount trade receivable in the statement of financial position also can show more realistic value. Okay, this is the application of what? Do you remember? We are not overstating the profit, and then we are not overstating the trade receivable. We show the realistic value. So this is the application of the principle of prudence. Okay, by maintaining the provision for doubtful debt, okay, a business also observe principle of matching. So your provision for doubtful debt, okay, if you're calculating the provision for doubtful debt, we are following 2 principles. One is principle of prudence, another one is principle of matching. We are following the matching also. Okay, matching principle and also prudent principle. Okay, prudent. Why prudent? Because we are not overstating the asset, we are not overstating the profit. Okay, we are calculating the provision for doubtful debt. Another one, matching. How it will be matching? The explanation is here. The amount of the sales which the business unlike to be paid regarded as the expenses of the year which those sales are made. Example, I sell this year, okay, I sell $100, okay, and then I estimate from the $100, maybe $2 I don't receive, so I record as expenses. My income is 100. Out of the 100, income of the sales is income, $100. Okay, out of the $100, I minus 2 as my expenses because I assume or I provide provision. I provision or I estimate $2 we cannot collect. So we record as a expenses. So we match this year income with this year's expenses. Okay. Okay, how we establish the number, how we calculate the number. Okay, how we calculate the number. There are three main ways. I actually got a lot of ways, but the main one is 3. Okay, looking at each individual credit customer account and estimate which one will not be paid. So we will see all the list of the trade receivable. Then from the trade receivable, we will consider each and every one, and then we will know who won't pay. But this is not possible. This is not possible for a very big company. If you got like a 3,000 or 4,000 trade receivable, you cannot go assess one by one, like a 3,000 people. It's not possible. For small companies, yes, they can do individual credit customer. Okay, they're looking at the individual credit customer and then do for small companies. Okay, for bigger companies, they go by number 2. Okay, estimating on the basis of past experience. Based on the past experience, we will set a percentage. We'll set a percentage. Okay, and then we will times from the total trade receivable. We take a total trade receivable times with the percentage. This percentage we will decide like a 2% or 3% based on our past experience. And bear in mind, your provision for doubtful debt, if more than 10%, if your provision for doubtful debt, more than 10%, your company is very bad. Okay, normally the provision for doubtful debt, I've seen like 4%, 3%. Okay, 5 also is considered high. 5, 6 also considered high. Okay, below 5 is okay, but more than 10%, very bad. Okay, more than 10% is very bad. Okay, the percentage must be around 1 to 4 is okay. Acceptable is 1 until 4. Okay, if more than 5, if more than 5 means your company not doing credit control. Okay, your company didn't apply a right way of credit control. Okay, so you need to improve your credit control if the percentage is very high. Okay, to reduce the percentage. Okay, another one is considering the length of the debt. Okay, have been outstanding. Okay, it means we are doing aging schedule. Okay, what is aging schedule? We simply draw one table, and then we will see how many people or how much the amount that people owe us from less than 1 year or more than 1 year. Okay, example, I do the table here. Okay, the aging will be something like this. Right, okay, this is less than 6 months, then less than 12 months, but more than 6 months. This is less than 3 years, and this is more than 3 years. Okay, let's say okay, here got like a 10,000, sorry, 100,000. Here got maybe 50 or 50,000. Here got maybe 10,000. Here got maybe 10,000 also. So now you tell me, this is the aging schedule. This is the aging schedule. 100,000, the value 100,000. Our debt is less than 6 months. So do you think we can collect the under 100,000? They owe us less than 6 months. Okay, most probably yes. After like a 6 months, 3 months, they will pay. So there's no provision, 0% provision, no provision for this because we estimate or we assume they will pay. Okay, they already owe us like less than 12 months, more than 6 months, less than 12 months. So maybe they will pay. So I put like a 1%, sorry, 1% lah. 1% of this we cannot collect. Okay, I estimate my PDD is 1% for this. And then for 10,000, less than 3 years, I think maybe 20%. Maybe 20% of this I cannot collect. 80% I think I can collect. And this one, they owe me more than 3 years. Do you think they will pay us? Maybe 50-50 lah. Okay, 50% of this they will pay. So I take 1% times this, 20% times this, 50% times this, and then I total up. That's my total provision for doubtful debt for this year. Okay. So just now I say that the percentage cannot more than 4%. If you're following the second step, okay, if you times from the total credit customer, then the percentage cannot more than 5%. But this one, if you're using aging, okay, aging can be any percentage. Okay, I've seen some companies, they're using 100%. Okay, it's more than, let's say it's more than like 10 years. If more than 10 years, do you think the guy will going to pay you? No, the guy definitely not. It's already 10 years you're asking the guy to pay. The guy didn't pay. So we just put 100%, and then the following year, we will record this as a irrecoverable debt. We wait until 10 years. Until 10 years, so the guy didn't pay. So we record as a irrecoverable debt already. Okay, this is the aging schedule. This is how we calculate the provision. Can you see that? A provision of the higher percentage may be made on the older debts. Okay, we wait until this example, 10 years. So I don't think so the guy will pay. 3 years, maybe I think 80% he will pay, 20% won't pay. So it's less than 1 year, I think only 1% lah. Okay, I think 99% they will pay. So less than 6 months, I assume everybody will pay me. Okay, that's how we will calculate in the aging schedule. Provision for doubtful debt. So we have 3 methods or 3 ways to calculate the provision for doubtful debt. First one, you look at the individual. And then you decide who are the people will become bad, irrecoverable debt. So we'll assume them as a provision for doubtful debt. Second one, we take a percentage. This percentage will decided from your past experience. From the past experience, we'll decide 1%, and then from the percentage, we'll times the total trade receivable. The third one is we use the aging schedule. This is the aging schedule. Okay, now we see how to record the PDD. Okay, now. Okay, creating the provision for doubtful debt. And remember, your provision for doubtful debt, whenever you create, it's your expenses. Whenever you create, it's your expenses. So we will debit straight away to income statement. We don't open PDD account. Normally, we don't open PDD account. We will debit the income statement, and then we will credit the provision for doubtful debt. We will credit the provision for doubtful debt. We'll debit the income statement, credit the provision for doubtful debt account. Okay, this is recording PDD lah. Okay, next one, we see the example. Sanjay financial year ends on 31st December. Okay, every year they will close the account on 31st December. During the year ended 31st December 2014, he wrote off irrecoverable debt. Okay, so my irrecoverable debt was 950. Okay, on the 2014. These are the important information that I need. I highlight all this. After that, on 31st December, his trade receivable amounted 25,000. So the trade receivable is 25,000, and he decided to create provision for doubtful debt for 4%. 4% from the trade receivable. So this is actually the which method? Second method lah. Okay, estimating past experience, then percentage of the total amount owing lah. We are using the second method. Okay, the popular one is actually second method lah. Okay, then after that, the question asked me to do write up a irrecoverable debt account and provision for doubtful debt account and also extract of income statement and extract of statement of financial position. These are the things that we need to do. Okay, first thing I want to do irrecoverable debt. Irrecoverable debt is your expenses. Irrecoverable debt is your expenses. So if expenses will be in a debit side, but how much is my irrecoverable for 2014? 950. So what I do, I go here, I write in the debit side now because it's your expenses 2014. The date will be December 31st. December 31st. How much? 950. 950. If you know, okay, whose amount is a trade, whose the amount is the irrecoverable, then we write the guy's name. But here the question say totaling. Totaling means there are few people. Okay, all these people we can group them as our trade receivables. Okay, or you can use them credit customer also can. You can write credit customer, but normally we write trade receivables. If you know the exact name, we write the exact name. Okay, if you don't know the name, we just write trade receivable. Okay, after that, anything happen? No, nothing happened. Okay, then later we'll balance up. But before that, we settle down the second account first, provision for doubtful debt. But before I do the provision for doubtful debt, I need to calculate first. I need to calculate first how much is my trade receivable. So what I do is 25,000 times with 4%. 25,000 times 4%. How much you get? Take a calculator and calculate. 1,000. Okay, it's 1,000. Okay, the provision for doubtful debt. Provision for doubtful debt is your current asset reduce. Okay, asset reduce lah. Okay, provision for doubtful debt is it's reduce the current asset, reduce the trade receivable. Your trade receivable will reduce because of this provision for doubtful debt. So if asset reduce means will be debit side or credit side. Asset reduce means debit or credit, it will be credit. Then we write December 31st, the amount is 1,000. The amount is 1,000. And don't forget, the item here will be income statement. Okay, income statement. Income statement. Now after that, we balance up this. We balance up this. Wait, irrecoverable debt is your expenses. Expenses end of the year. Expenses end of the year. What we do? We will transfer to income statement. Okay, then the amount here will be 950. Okay, the provision for doubtful debt, we just leave it like this. Okay, we just leave it like this. If you want to balance up, can balance up. You put a balance CD. Okay, write the date, balance CD. Then this balance CD will go balance BD lah. If you want, you can do that. Okay, but normally no marks for that. Unless the question asks you to balance up, then you balance up lah. Balance CD, balance BD. Okay, after that, the question asked me to do extract of income statement. Income statement, I'll put here other expenses lah, under other expenses. First thing that we have is irrecoverable debts. How much is my irrecoverable debts? 950. After that, I have provision for doubtful debt also. Okay, so right here, provision for doubtful debt. Doubtful debts. How much provision for doubtful debt is 1,000. Okay, that's it. Okay. After that, how about your statement of financial position? The case asked me to do the extract. Extract which part is current assets. Under the current asset, we have trade receivables. Okay, trade receivable. How much is my trade receivable? Can you check? My trade receivable is 25,000. So I write here. Normally we write in the third line to 25,000. This 25,000 need to minus with less with provision for doubtful debts. How much? 1,000. I put in a bracket because we need to minus. So your total trade receivable is 24,000. 24,000. Done. Okay, this is how we present our statement of financial position with provision for doubtful debts. Okay, I repeat again. First, I have irrecoverable debt, so I record in the expenses account, which is the debit side. Okay, after that we have a provision for doubtful debt, and my provision doubtful debt is like current asset decrease. Current asset decrease means it will be in the credit side, so I write in the credit side. The item here will be in income statement. If you want to balance up this, you can balance up balance CD, then balance BD, normal one lah. After that, you balance up this. Since this is the income, this is the expenses. Since these are expenses, the expenses will transfer to the following. The expenses will transfer to income statement. The income statement. So I write the income statement 950. Then I go here in the income statement. This is my income statement. Extra income statement. I write irrecoverable debt 950, and this provision for doubtful debt also I write here as expenses. After that, the current asset, in the extract of statement of financial position, under the current asset, I write trade receivable how much minus the provision, and I get the current trade receivable, the trade receivable that I can collect. Okay. So next one, we talk about adjusting the provision for doubtful debt. Okay, adjusting means every year your provision for doubtful debt will increase and decrease, So if your PDD, provision for doubtful debt, increased than last year, we compare with last year. If it is increased, then we record in the credit side because it's an asset reduced one. Asset reduced means will be credit. Then if it is decrease means we will record under debit side. If decrease means we record in the debit side. So remember this, whenever your PDD increase, if your PDD increase, it will be credit side. PDD decrease, it will be debit side. Remember this. Okay. So we continue. I'm talking about the provision for doubtful debt account. In the provision for doubtful debt account, we follow this concept. Sanjay financial year ends on 31st December as usual. On 31st December 2014, Sanjay provision for doubtful debt. The provision for doubtful debt is 1,000. It is already there. It's already there. And during the year 31st December 2015, we are doing accounts for 2015. Sanjay wrote off debts of 990. This is your irrecoverable debt because wrote off means irrecoverable debt. On 31st December 2015 of the same year, the trade receivable is 28,000, and he decided to maintain the provision for doubtful debt of 4%. Okay, 4%. After that, the question asked me to do provision, first irrecoverable debt, provision for doubtful debt account, and extract of income statement, and extract financial statement. Okay, we need to do all this. Okay, first one, I want to do the irrecoverable debt. Okay, will be in a debit side. Irrecoverable debt will be in a debit side. Why? It's your expenses. So I write here 2015. Now we are doing for 2015, December 31st. Then, right, if you know the name, we write the name now. Since you don't know the name, we write trade receivables. We write trade receivables. Okay, then the amount is 990. The amount is 990. Okay, there's any other? No, nothing. There only this lah. So we are done with irrecoverable debt. Next one, I want to do the provision for doubtful debt. But before I do the provision for doubtful debt, do you think the provision doubtful debt, do you have any balances? Do you have any balances in the provision for doubtful debt? Yes. On the 31st December, this is a balance CD for 2014. Okay, and it will become balance BD. How much? 1,000. So it will be in a credit side because it's reduced your Trade receivable. So not December, sorry. January 1. Date will be 2015, because December 2014 will become January 1 lah. Okay, for first day lah. We write here balance BD. We write here balance BD. It will be your 1000. 1000. Okay, after that, okay, we do for this year. Can we calculate how much provision for doubtful debt for this year? Okay, maybe I calculate here. How to calculate? It's very easy. How much is your trade receivable? 28,000 times with 4%. 28,000 times with 4%. That's your provision for doubtful debt for this year. So how much is provision for doubtful debt for this year? 1120. 1120 is your provision for doubtful debt. You can use your calculator, check out 28,000 times 4%, 1120. So last year was 1,000. Last year was 1,000. And this year is 1120. So now can you tell me it's increase or decrease, and how much it's increase, how much is decrease? Okay. So increase or decrease, last year was 1,000. This year was 1,120. So it's actually increase. Increase how much? 120. Increase 120. Do you remember? If your PDD increase, you will debit or credit. If your PDD increase, you will debit or credit. Do you remember? So let's check out. Yes, this year. If your PDD increased than last year, it's increased than last year, we will credit side. How much? We will credit how much increase on here. We'll credit how much increase on it. So we go here, we write 120. And then, oh, sorry. This one's supposed to be December 31st. Okay, then the detail here will be income statement. So this is our extra loss for this year. So we write income statement 120. After that, anything else happen? No. So what we do? We will balance up. Okay, how to balance up? First thing, I balance up the irrecoverable debt on the 2015 December 31st. We write here income statements. How much income statement? 990. Done already. Okay, after that, for this one also, for provision for doubtful debt also, I need to balance up. How to balance up? We see which side bigger. Of course, the credit side lah. 1120. Here also 1120. Then don't forget to draw a line. We need to draw a line. Okay, draw a line like this. Like this. Like this. Like this. Okay, this one also you can draw a line like this. One row if you want. Okay, after that we continue with this 1120. And on 2015 December 31st, I write here balance CD. This balance CD will become my 2016 January 1 balance BD. Balance BD. How much my balance BD? 1120. Okay, then next year we'll continue from here. Okay, this is how we balance up. Okay, next one, the question asked me to do income statement. The income statement is very easy. It will be under other expenses. Other expenses. First thing we write here is, we write here, wait, I copy this, easy for me. The two things that we write here is, one is irrecoverable debt and provision for doubtful debt. So how much irrecoverable debt? This one, you take this income statement right here, 990. And how much is your provision for doubtful debt? Okay, here, which provision doubtful debt you take? You take the income statement or you take the balance BD? Okay, so we are doing income statement, right? We need to take the income statement. How much it's increased will go to income statement. How much? 120. 20. That's it. After that, the question asked me to do statement of financial position. Statement of financial position. So it will be under current assets. Under current asset, we write trade receivables. Trade receivables. Oh, yeah, sorry. Trade receivables. How much is your trade receivable? Do you remember? My trade receivable is 28,000. So I go here, right? 28,000. Need to minus with how much is your provision for doubtful debt? We take which one? We take the balance CD. Yeah? We take the final balance. Okay, 1120. So we write here 1120. So what do you do? 28,000 minus 1120. You'll get 26880. 26880. That's your trade receivable. Okay, this one don't forget to label less provision for doubtful debts. Okay, this is how we do whenever the provision for doubtful debt increase. Whenever the provision for doubtful debt increase. Okay, now we see another one example, which is example number 4. We see what situation is here. Sanjay financial year ends on 31st December. On 31st December 2015, Sanjay provision doubtful debt amounted 1120. So this is your balance BD lah. Okay, this is your balance BD. On 31st December 2016, we are doing for 2016. The trade receivable, your trade receivable is 24,000, and he decided to maintain the provision for doubtful debt at 4%. Okay, there's a typo there, at 4%. Then we need to do, there are a few things we need to do. One is the provision for doubtful debt, extract income statement, extract statement of financial position. These are the 3 things that we need to do now. Okay, but before we do, we cannot do this straight away because we need to calculate first. Okay, we need to calculate how much is your PDD. So how to calculate PDD? 24,000 times with 4%. 24,000 times with 4%, you will get 960. You'll get 960. You can use calculator and calculate. Okay, 24,000 times 4% will get 960. 960. Okay, after that, can you compare with last year's one and tell me increase or decrease? Last year was 1,120. This year was 960. So it is decrease. Decrease by how much? 1120 minus 960 is 160. It's decrease. So I go back to my notes just now. If your PDD increase means it will be credit side. If your PDD decrease means it's your debit side. So here I would like to add another one thing. And if your PDD increase means it's your expenses. And if your PDD decrease, if your PDD decrease means that's your income. Remember this. If your PDD increase means that's your expenses. If your PDD decrease, provision for doubtful debt is some bad thing lah. If your bad thing increase means your expenses. If your bad thing reduce, if your bad thing is reduced means it's your income. Remember this. So I go here. I go to the question number 4. It will be debit side or credit side. First time, I need to write the balance BD. The balance BD will be in a credit side because provision for doubtful debt is asset reduced. So I write here 2016, January 1, I write here balance BD. My balance BD will be 1120. 1120. After that, I'll compare with last year's, this year one. This year is decreased by under 60. If decrease means debit or credit, you remember? decrease means will be in a debit side. Remember this, decrease mean will be in a debit side. So I go to debit side, I write 2016 on December 31st. I write here income statement. Income statement 160. It's reduced by 160. After that, we will balance up. How to balance up? You see which one bigger? Of course, credit bigger, 1120, 1120. 1120 minus 160, you get 960. This 960 will be your balance CD. This balance CD will become January 1, 2017, balance BD 960. After that, don't forget to underline a mass line. Line here, line here, line here, and line here. Okay, next one, the question also asked me to do extract income statement. So how to do extract income statement will be in a, this time your decrease. Decrease mean other income or other expenses. This one will be other income, because provision for doubtful debt, decrease means is your income. So right here, provision, we write reduction in provision for doubtful debts. How much? 160. Okay, reduction in provision reduction in provision for doubtful debts. Okay, 160. After that, the question asked me to do statement of financial position. Still same, this one exactly same. Current assets, under current asset, we write trade receivables. Trade receivables. How much is my trade receivable now? My trade receivable now is 24,000. 24,000. So I go here, I write here 24,000. This 24,000 need to minus with provision. Need to minus with provision for doubtful debts. Okay, how much is my provision doubtful debt? We take the balance CD here. We take the balance CD here, 960. 960. So 24,000 minus 960 will get 23040. That's my new trade receivable. That's my new trade receivable. Okay, that's it for this part. The provision for doubtful debt. This chapter 13 will end here. Okay, thank you so much.